First bar of the day, we are very close to the previous low. Let's say if we can retest this box. The box is around 557.01, 575. Let's say the price test this point, retesting the previous day low. Yesterday was a complete and total range, and if I go to the daily time frame, it was a doji and inside candle, doji and inside. So was a doji. Today I'm expecting the price to test the previous week's low. Overall, I'm more biased toward the downside. So see on the 4 hours, the 4 hours is obviously towards the downside, more biased towards the downside. Testing the previous week's low will take us to 500 level, which is 100 points beneath us, which is a good fair target. On the hourly first leg, this is the second leg. So even on the hourly, everything is aligned towards the downside. So I am more biased towards the downside than to the upside. So let's say if we can get a trade out of this general direction, coming to 5 minutes. The first 5 minutes are about to close. It's a strong bear bar. We will likely get a second leg. Let's see how the second bar will close. Gonna mark on the previous day close to today's open. This is the opening range gap. We opened below the moving average. That's an indication of an always in short, right? So this is the idea of this trade. Let's say on the 15 minutes, we are close to this low, which is 597. It's a very, very strong bear bar. Let's say if we get some sort of a reaction out of this price, which is 579, we might get some reaction out of this price. After that, I'm looking towards 507. Getting a reaction on the 1 minute. Lock. Still, it's a strong. This is where we open. Opening of the day. Going to mark this as a black line just for reference. So we are testing this one. So this is the validating criteria at 934. None of these candles are closing above the prior bar high. That's an indication of a strong trend, keeping the reference of 1 minute time frame in mind that even on a 1 minute, the market is not able to go above the prior bar high or let alone close. So it's a strong trend. I will be very, very careful, try to buy this. If I, for example, try to buy it, it needs to give me some confirmation. The confirmation should be something like it needs to close above this high. Then I'll put my stop loss beneath this bar, which is this is line, this line 579, but I'm not interested. Yes, for sure it can make a good trend towards the upside from this point because this is an extreme level, but I'm not interested in taking a long. I'm more interested in taking a short. So everything about this is screaming shorts, and 484 is the point I'm interested. You know, the reason is last week was a doji candle overall. Last week was a doji candle overall. We are very much likely to take the low of and the high of the doji candle. Basically, it's making a contracting triangle, right? Coming back to the 15 minutes, coming down even lower. So I can still take a long position from this point, but I'm not gonna. Okay, not gonna. I'm waiting for the first 15 minutes to close. We have 6 minutes left till this 15 minutes candle is gonna close. Then I'll take a short again. So we are bouncing off of this level, but I'm generally not interested in taking a long. Yes, it can give me a long trade, but I'll buy on the condition if the 15 minutes close somewhere here, and once we move above this bar 667, then I'll use this as a floor for my stop loss, aiming for higher. So I need some solid ground to protect my stop, right? If I start to target towards the upside, this will be my target. That will be 739. 739. Let's see if we can get out of this zone. We are retesting this zone, retesting the previous day low, right? So the market created a gap between yesterday's low and this candle's high. Let's see if this gap is gonna close. If this gap do not closes, right? For example, it need it it's an indication that this is a trending market towards the downside. Obviously, right? If it leaves the gaps open. So what do I mean by the gap? This is the 50% of the first candle's range, right? Also, the previous day low. We have a gap between these 2 points. If we close above this high, so it's an indication that the work done by bears on the first candle is weak and bulls are stepping in around the previous day low and this point 557.01. This is the first leg. For example, bulls who bought the close of this bar, they will get 1 times their risk at this price. See, I said I can go long from this point. I'm not gonna. It can make a good trend. So, but still, I'm not interested in taking a long or a short until the 15 minutes close. So we have 4 minutes left until the first 15 minutes will close. This is the first leg, second leg. So this can happen either this is the first leg and some sort of retracement will get some sort of a second leg. First leg, the one standard deviation of this leg takes us exactly to the previous week's low. On the regular trading hours, we are still below the moving average. That's an indication of ranging or a downtrending environment. So we are above the 50% now, very close to one standard deviation of this leg. First leg, you're getting the second leg. Second leg will be around 653. This is the previous day. What? No, no, no. It's the previous day low, not the high. My bad. This is the previous day low for the electronic trading hours and regular trading hours. We're chopping around the key level coming to. We have 2 minutes left, but things to keep in mind. Things to keep in mind that this 15 minutes has 2 minutes to it. This 15 minutes will be closing below the prior bar low. So the next gap will be around 649. It's overall more downtrending than upwards. So I'm not interested in taking a long unless and until we move above this price or any of these prices. Let's see if the 15 minutes is able to close or close above or below this previous day low. That will indicate a lot of things. Range of the first candle, we are chopping right around the 50% of this range. So the third bar of the day, right? The first bar has a 20% chance, 20% chance of being the low or the high of the day. That means 80% of the time, the high or the low of the day will be tested of the first bar on the 5 minutes. So is it that we are gonna get a sharp move towards downside? Then after midday, we might come back up, make some sort of a doji again. Basically, I'm saying, is it gonna provide me some sort of a scalp today, right now, or maybe it's delayed? That's the thing I'm really thinking about. 14 seconds left. Once this 14, once this will close, mark this as this whole range will be marked for this whole range will be marked with this color. Once we move below this price, right, I'll be taking a shot aiming for 50 points. That's this is the idea. That's the idea, right? Need a closing on a 1 minute for just in a rush. I need a closing on a 1 minute below the price, below this range. I'll be aiming for 50 points, just risking one to get one. It's a sharp move down. The first leg, can we get even half of the second leg? Ugh. I need a closing below this. Keeping things in mind that 15 minutes has closed towards the downside, that's 60% more likely to give me a short setup, or continuation is more likely than reversal if you are if you want something for you need a closing Yeah, that's nice. I'm not really expecting much from today. I might just basically, I'm generally expecting some sort of this move, then it's gonna chop for some time, and I'll be taking some swing trades from 500 level. 500, yeah. These setups are more probable. That's why I'm just risk for one times my risk and just take a scalp and get out of the way of 26, right? Any now at this point, it's all a downtrend, right? I'm not asking for too much. Am I asking for too much? Is it unreasonable targets? No, it's completely reasonable. The targets I'm aiming for are contained within the targets. For example, I was aiming for previous week's low. I'm not even targeting the previous week's low. I'm targeting way above this point because I have some sort of resistance, which is 500 level, right? 500 level. So I'm not even targeting 500. I'm targeting 519. Right? We have about the things I am worried about is basically this point. See this, it can do something like two leg strap and something like this. That's the only reason I'm worried about because this is a ranging condition. So it can make some sort of a second leg trap. In that case, I'll be getting out right around somewhere here. Once we close within this range, or once we close above basically, let's say this is the 15 minutes, right? The prior 15 minutes closed at 557. We closed above on a 1 minute above inside the range. That's an indication some sort that it's gaining some strength. Or we closed above some major breakout points, right? If you close this gap, so I'll be risking. This is not complete risk. 57 points is not what I'm risking. If it gives me conditions to get out, I'll be getting out. This bar closed. So this price action is natural. Even we closed below this bar and this bar, that's also an indication of downtrend. Both of these things are indication of downtrend. So the prior 15 minutes closed below this point. We are below the 15 minutes range. That is the yellow bar. So even on the 1 minute, we are not giving any closes above the prior bar. We tried to. The reason, if you want to understand it more deeper, the reason we tried to move higher but failed on 1 minute is because of this new candle. So every new candle will open up with its own volatility depending on the time frame and the ATR, right? If it's a 5 minutes candle, it will basically chop around for on average ATR range, right? It's gonna chop around 15, 10 points, then continue in the real direction. If it's an hourly time frame, it will chop around according to its own ATR range. So within the next 9 minutes is it's gonna do something crazy. then it's gonna continue because the hourly is gonna close, right? So hourly ATR connect, right? Acha. So this is complete risk. 57 points is the total risk I'm aiming for. This is the default generic setup. 57 points is what I'm risking. I'm aiming for 57 points, nothing more than that. So that's the candle that's holding price. So I'm considering this candle. If we close above this candle high, or this candle high on a 1 minute, that's an indication that we might basically move a little more higher. But it's all context dependent. For example, if we try to move higher and higher around last 2 minutes or at 7 o'clock, that's something else. Not is just if we regain this territory, that's we closed above inside the range. Yeah, we closed inside the range, made somewhat of a two-leg trap. Let's say if we get a closing above on a five this point for 5 minutes bar, we have 1 minute left, very close to my stop loss basically, right? So at this point, if I close it right here, if I, for example, close it right here, I am basically it's half of my position, right? Need 30 more seconds to save what's left of the position. So what's gonna happen in 30 more seconds? Basically, right? We got a closing below. If we get an immediate closing above, that's an indication of a general range, and I'm not interested in taking another trade until it breaks free. So that's also some telling me something. If we do not get a closing above, that's an indication that this is the wrong move. We will get some move after some time, basically after 7 o'clock or 10 o'clock. See, so I am going to close this position now. There is no reason I should be staying in this position because that was the criteria. That was the criteria. We closed below, we closed above. It's done now. It's not. We have closed on the 5 minutes within the range of this yellow box. Basic criteria was on the 1 minute. Yes, it can come down, but I'm not interested again. Not this price action is a ranging condition. We will get to the previous week's low at some point, but it might be delayed an hour or two. So basically, I have lost about 30 points. I was saved about 20 points, 56, right? It was total risk of 54 points. The moment I did not had a reason to be in this trade, I got out. So if it gives me another reason to get in, I might get in, but not generally interested now. I'll be more interested once we close. Like, this is a choppy market. This is the first leg, the second leg trap, or you can say it made some sort of a wedge, right? So, so As for the bulls can like take a long. I'm not interested in taking a long, putting the stop loss right beneath this green line, because this green line can give an extremely good risk reward ratio towards the upside. So I'm not interested in swing trade as of this price. I'll be more interested once we take out the previous week's low. Overall, because this is an inside week, this is Tuesday, right? It's an inside week. I'm expecting, not expecting that much. 3 minutes left till this hour is going to close on the electronic trading hours, and 30 minutes will close on regular trading hours. First leg, second leg. One thing I can almost guarantee, one thing is I can almost guarantee is we are going to come to this point, which is 571, 571, 81. This point, it can basically chop around here for some time, but we are going to touch this point and the previous week's low. So on the electronic trading hours, it's equal to 507. That's basically like an 80% chance that we are not only gonna get here, we have a 60% chance of getting a swing, extremely good swing trade from this 507. Basically, what I mean when I say swing trade is this can be some sort of this sort of move. Like I can risk 100 points to get 500, 600 points. Okay, 1 minute left. At this point, because of the hour is going to close, it can just come back down. So if it gives me some good trade, I'll take it on a 1 minute. I do not have a reason to get short as of now. All of this is the candle what's holding price 5953. On a 1 minute, it closed below the prior. Range is low, but first leg can be the second leg. If we get a closing below this point, then it's the odds increase towards the downside continuation. Things to keep in mind, we are below 20 period moving average on the 5 minutes time frame. Regular trading hours, that makes it overall always in short. We are below 20 period moving average on the hourly time frame. That is a swing short overall, right? So this this trade can work out. I just know that there's a 60 to 70% chance that we will get some move towards downside. I'm just not sure if it's delayed or not. Because why am I considering price delays? Because it's an overall trading range and the volatility index is at 14, right? Now we can get some sort of, because of the 10 o'clock new hour, made an initial range. The hourly closed below all of these prior bars. Now the previous day low, we got a closing on the hourly beneath the previous day low. We have a gap of 24 points. So everything is screaming, literally screaming shorts, right? Overall, the second candle was a disappointing candle. 9:45 to 7 o'clock candle was overall a doji candle. What are the things that make a good case for a range? Closed below, we closed below, we closed above. So that's a range. 15 minutes closed as a doji, that's a range. Volatility index is at 14, that's a range. Overall, this is a range we are very close to, like 786 level. So, okay, things, see, we closed below this point, we closed below this point. If we close above again this point on a 1 minute, that's always obviously a fractal. So the 1 minute is acting like this, so is the 15 minutes. So I'm not interested, that's why. The market hasn't given me a reason to get in again, so I won't be getting in. It gave me a reason to get out and save basically what I had left to the trade, that was 26 points. So if it gives me a reason to get in short again, I will, because that's, I was worried about a range and 10 o'clock. That is out of the way now. So turns out it was a good decision, me getting out, right? Saved 26 points. So sometimes it works out like really good. Sometimes it's a regret getting out. Basically, for example, if it would have continued moving down, I would have entered again. So in both cases, me getting out was a good decision, right? So the first leg, we got our second leg right at the moving average. Now we can, okay, keep an eye on this point. 10-4 candle is imbalanced. We have closed above the prior day high. First leg, second leg, for the first leg, second leg, I will be more interested in taking a long once we close above the first bar of the day. Otherwise, we are closing inside the range. I'm not. So, for example, if we start to move above the 15 minutes range towards the upside, will I take a long position? No, because I am not interested. Right above us, we have an hourly 20 period moving average. Right above us is the previous day high, and we are back inside the range. So that was my only shot towards trend continuation towards the downside. Now it's not worth it. It's not worth even taking a trade. Can this happen? The first leg, second leg trap. We got bulls, bears who sold the close of this bar. They are trapped, so they will get out at some. They took a short. They will try to short it here again. Get out breaking right around this point. So price will likely, it's gonna come here. First leg, second leg. First leg, second leg. Both can be traps. I'm not really convinced. I am not going to take long in any case. Yes, it can give me some long, but I'm not interested. It needs to go above the moving average, close above the moving average, give me a proper risk to reward ratio and a proper target. Otherwise, nah. Here's something really interesting. Check this out. By the way, I'm not interested in taking a trade within this range. It's an overall range and will likely to bounce off these points in 652 and 63, 52 through 63, 52, 63, 52, 63. Overall, if I make a bull case, forgetting that we are in the range, I'm not able to. Because we are below the moving average, yes, I can make a case that we are going to test the high of the day, which is the first candle, which is less likely to be the high of the day, which is the first candle is very much less likely to be the high or low of the day because there's basically a 80% chance that we will touch it on the 5 minutes, right? I can make a case that we are going to touch, but after that, now because that's the that exact point is the weekly open, right? Even if you try to close the gap, I would be risking basically what I would be risking, say, okay, this would be my risk, be aiming for previous day high, right? So I would be aiming for the market to cross the hourly moving average to cross this high inside the range. See what happens when we take out the high inside the range, the market. Even if this high and this high are relatively close, there's still very much likely that it's going to chop around because it's an overall range. I'm not interested in taking a long as of now. No, no. It's too wishy-washy, wishful thinking. If it gives me a short position now, I'll be more than happy to take it because that's the first leg, second leg trap. The first leg, second leg trap. If you close below this bar, basically the 10 o'clock low, that's interesting. Is the first candle low of no way. Okay, that's the first bar on the 1 minute on 10 o'clock, right? That was the low of the hour, right? So, so what are the odds that the first candle low is gonna be the low of the hour? We are 12 minutes into the hour. That's the low of the hour, huh? So 15 minutes is about to close. The 15. Oh, see, I need this 15 minutes. Come on, NASDAQ, you don't have to do this. I need this 15 minutes to close below 614. If it closes below 614, we still have a chance that the trend might continue. If it closes right here, then I'm leaving. I am not interested in trading. I'm not interested in trading. If I trade within these conditions, I have to like basically short every high or short every new high. No, 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 no. For me to go short, I need a closing below here. Otherwise, no. I know all of this is contained within this price, this black, the first 9:30 candle, 15 minutes. All of this price action is contained within the first 15 minutes, but still it's 60% more likely to go up than come back down. So it's overall range. So if I simplify the overall setup, if I exclude everything, if we come again right beneath this point, I'll just take a short again. Right? Yeah, now it's gonna do this. Coming back to 1 minute, the first leg, we got the second leg. One standard deviation of this price point will take us back low to the previous week's low. Oh God. Inside the range, I'm not interested in doing anything. Reading the tape, we do not have any imbalance to the up or the downside. That was the imbalance. Other than that, we have 10 o'clock low. Price can take out the low, but so this is the 10 o'clock candle. If we, if for example, I'm too much eager to take a short, what is the criteria I'm aiming for to take a short? Otherwise, I'm not, the price is not giving me any reason to go short. I'm generally looking for a reason that makes the price going lower a higher probability. That reason would be if we close below this 5 minutes low, right? That will make us 60% more likely to go down and 40% likely that we are going to chop, right? So if I am more eager to take a short, I need a reason. So I'm looking for a reason and place to put my stop loss against, right? So if we close below this point, I'll and that would be the first validation. Then we move below the low of this bar, which is the overall 15 minutes range, right? And I can put stop loss right above the prior candle high. But since the price is delayed in making two leg trap, okay, now take a look at this. This is the candle with holding price towards the downside. That candle does not mean anything on a 1 minute. If we close above this high, I am not interested. Reason being, there are two modes of the market. As you, if you are listening, you already know two modes. Simplify two modes of the market: trending and raging. Logically, if something is trending, it's going to close below the prior bar, low, close below the prior bar, low, close below the prior bar, right? So that action in and of itself creates a trend one side or the other. But for example, if you close below the prior bar, low, closed above the prior bar high, again close below the prior bar low, again close below the prior bar high. The act of doing this makes a range, right? It's as simple as that. Then again, you need to look at what is the price, what is the candle was containing the price, what is the dealing range. That becomes the dealing range. It's as simple as that. This is the dealing range on the 1 minute, right? We are very 60% more likely to close above the dealing range because we have closed above this candle high, but we are still within this range. Same logic goes within this 15 minutes. This is the candle was holding price towards the downside, but since we have closed with low above this high, which does not really mean anything with significance to trend because that's inside of this wick overall. But it's slightly more probably that we are going to continue higher than lower. Simple. Because on the lower time frames we are closing higher, so that is an indication that we are lower on the lower time frame. It's stronger. Okay, so close below, close above, close below, close. That's a range. It's a range. So if you have some strategies that you can trade within the range, basically if you're scaling in, right? If you bought the close of bought the low of this bar, right? If you bought the low of this bar, you're likely to be in profit. If you bought the if you bought the open of the first candle and you bought the low of this bar or the low of the first candle, you bought both. Bought some here, you bought some here, you're likely to be in profit. For example, your break-even point was right around this point. You're chopping around the break-even point of somebody who bought right here and bought some lower. So can this produce another leg or will it give a closing above these bars high? Right? If it close above these bar high, then this all range will be basically mean nothing. So This range is equal to this range on the 5 minutes. Is this a bear flag? Closed below the previous day low. We are trying to get a second leg from this point. We might get a second leg from here. If we get a second leg, that will take us below this range. First leg, are we getting the second leg? I'm taking a shot again. Need a closing below this price again. I need a closing. That's the whole point. Without the closing, it won't really matter because I can just easily get trapped. That was the first leg. We got the second leg. So I need a closing below this green line. That's nice. Nice. That's what I wanted to say. Fast. I need it quick because that's imbalanced. 1027 is imbalanced. I need this to be very quick. I'm 30 points in profit, but still not 1.1 times my risk. So I won't be getting out. I'm just taking off some of my position off. That's the thing, right? The reason we are getting this because of the 30. Okay, I'm getting 45 points. I'm getting out, right? I have gotten out of this trade. Control Z, Control Z. I have some things to do. I, if I like had time, I would just leave it till 507. Okay, I close this trade. Okay, okay. Understanding the stream now.